the business is, you have to be in it, all the time. Where here, there's a passiveness to it. Once you can get the management going and get the property stabilized, then you could really scale it.
All right, guys, welcome to the Millionaire Enlisted Podcast. Today we have Darin Batchelder. He is a real estate investor, and he has also a number of other credentials: limited partner, loan manager. He has processed over $4 billion in loan sales, so tons of experience today. And if possible, go ahead and hit that subscribe button, give us a like, give us a follow, and a 5-star review. All right, Darin, tell us, how did you get started in this, and where are you at now? Because you have tons of experience. So tell us your crazy journey.
That's a lot right there. So, well, thanks first of all for having me on the show. Appreciate the chance to get to know you guys and hopefully add some value to your listeners. So my background, I've been in the loan trading business for a long time. I have my separate business that does that, focuses on trading residential, multifamily, and commercial real estate loans. And about 2 years ago, I decided I wanted to get into the real estate game, and but I didn't want to do single family fix and flips. So I wanted to do larger scale multifamily properties, and so I joined a mentorship group here in the Dallas area, the Brad Sumrock group. And I met a ton of other syndicators, and I was able to leverage their experience and the partners they were working with, the vendors that they were using to be part of their team. I was able to leverage their experience to come out of the gate pretty quick, and within a year's time, was able to go from 0 large scale multifamily to a 76 unit deal.
Nice. That's awesome. So let me ask you this. So as far as your business that you had beforehand, because I get the whole not wanting to do the fix and flip. You had a mentor. Obviously, that was worth it going into
For
that?
me, the value was getting plugged into the network. So I think there's a ton of value in learning from people that have already done what you want to do, right?
Yeah.
So I was able to say, hey, what property management companies do you guys use? What attorneys do you use? What general contractors do you use for the rehab? What were some of the things you had to look out for? And so that shortened my learning curve dramatically. So it was definitely an investment to join a group like that, but I would do it all over again.
Gotcha.
Sure.
And are you still doing the loan piece of it too, of your self startup, your business?
Yeah, so I still have the other business that trades loans as well, but a lot of my focus is growing the real estate side of the business.
That is awesome.
So what made you? I'm sorry, Oscar. What made you change? So you had your own business, and what made you direct your life towards real estate and multifamily?
A few different reasons. One is that the other business, is it's a business, and you're taxed based off of the income on the business. And with real estate, there's significant tax advantages to investing in real estate based on the depreciation and the depreciation expense that could be allocated to each investor's share of the investment. And so that was very attractive because the wealth building opportunity within the multifamily side and all of large scale real estate. The other thing is that I met with a insurance guy recently, and he was talking to me, hey, when do you want to retire? And now with this multifamily thing, I don't really want to retire,
Yeah.
So I think I just want to keep doing deals and doing bigger deals. But with the business, the business is, you have to be in it, all the time. Where here, there's a passiveness to it. Once you can get the management going and get the property stabilized, then you could really scale it. You have third-party management. I know some syndicators, they grow to a size where they end up bringing management in-house, and they actually form a management company. But right now, my focus is third-party management. But you can scale it. Once the property is stabilized, you can go on to the next deal, and onto a bigger deal. And the other thing that's very attractive to me about the multifamily syndication space is that with my other business, all the profit comes to me and my family, right? And on the syndication side, I've got a lot of limited partners. So I'm actually helping not only grow the wealth from my family, but also the wealth for all these other people. And I just turned 50 yesterday. For me,
congrats.
Thank you very much. You guys are a lot younger than I am, I could tell. But, in order to, it's a way for me to give back and serve others is, if I could take the experience that I've had and then learn from people in the group and then leverage that so that I could help grow the wealth for other people, that's exciting to me. And that gives me, it gives me energy and a passion to keep going forward.
That's awesome. So you definitely fell in love with it, and it seems like for you this isn't work anymore. It's actually just fun. Am I correct?
Yeah. Well, yeah. I wouldn't go totally there. I mean, it's I love it because I love building relationships, right? So on our deal, we had 44 limited partners on the 76 unit deal. And so I want to continue to impact more people and more people in a couple different ways. One is I want to attract other people to want to, invest passively into these types of deals, because I didn't even know I could do that until 2 years ago. I would have invested with other people as I was making good money in different career paths. But I didn't even know you could do this.
Yeah.
Pool your money and buy these large properties. So I'd like to attract new people so I can help grow their wealth. But I also want to, and this has no financial gain to me at all, but I just love giving back and helping the next guy achieve their goals. So I have a lot of people reach out to me on Instagram. And they're like, "Hey man, I listened to a podcast. I'd like to, get better understanding of what you think I should do for next steps. I want to get into this." And I get off the phone and I tell my wife, that guy is not going to invest with me, but he's a go-getter. He's a hustler. And I think he's going to be successful. And that was time well spent. I'm not going to make a dime off of it, but that's part of life, right?
Yeah.
Is giving back to other people. And so, I'm very open to giving back my time to help other people. And a ton of people have helped me along the way. So
I love that, man. Giving back and that abundance mindset. As far as your two businesses, syndication, your loan, are you complementing one with the other? Is there
no, they're
integrating the loans?
They're pretty separate. I would say that the only crossover really is in knowledge. So for years I've traded large multifamily portfolios. So, before I got involved in the mentorship group and decided to go after large scale multifamily real estate, I already understood the language. I already understood the asset. I already understood the terminology. And so that has been helpful. I already understood a lot of different financing programs, so that, was helpful. But other than that knowledge, I'd say no, they're pretty two distinct businesses.
Awesome. German, what you got?
No. I was gonna ask him. So you've been always a businessman, an entrepreneur, right? And you've been on the associated with real estate before. How come you didn't do this before? How come only 2 years ago? So can you take us to that?
I wish I did it earlier, man. When I
Okay.
talk to young guys, I'm like, you found the niche, man. Figure it out and do it. You know.
Yeah.
So I was brought up with the go to school, get good grades, go to college, get good grades so you can get a good job and climb the corporate ladder, right? I mean, so, I graduated as a CPA with Price Waterhouse. Well, accounting degree. I got my CPA with Price Waterhouse. I worked with PepsiCo and traveled international with them and worked in software sales and, made good money. And then I transferred, and the last job I had before I started my company was with a large bank, a Dutch bank called ABN AMRO. And I was on their mortgage capital markets trading desk. And so we were doing institutional trading. ABN AMRO was originating, they were a top 5 jumbo originator. They're, millions and millions and millions of loans. And then we were on the trading desk reselling those to other banks, okay, across the country, residential loans and also multifamily loans. So I got to know the asset class from that. But I always had the entrepreneur itch. I always wanted to go off and do my own thing. So I was with them from 2002 to 2006. That was with the last big real estate run up in values. And they, I made really good money, and I just put it all aside. And I told my wife, at some point this is going to end. It doesn't make sense that real estate prices are going up 15% a year and income's only going up 3 or 4%. At some point, something's got to give. And so we all know that the financial crash happened. And when that happened, I left. I spent like 6 months playing golf. And then I was trying to figure out what to do. I knew I never wanted to work for anybody again. Okay. So I knew I wanted to start my own company, but I didn't know what I wanted to do. So after about 6 months, I was chasing around some commercial real estate deals, but I couldn't find anything that I liked. I just started calling a few of my old banking customers and asked them, hey, would you do business with me as a one-man shop? And I kind of thought they were going to say no, but they were like, hey, Darin, man, if you could find me good quality loans, I'd do business with you all day long. Our risk is really with the other bank that we're buying the loans from. We're just going to pay you a broker fee. And so I went off to the races. But interesting thing, people have asked me, what was the hardest part about starting your business? And the answer is kind of funny is I say signing the lease to my office. And people are like, why? Was it a long-term lease? Was it really expensive? Like why was that such a big deal? Because once I signed the lease, I had to tell my family, my friends, my ex-colleagues that I used to work with that I'm in business. And it's that fear of failure, right?
Yeah.
You're putting yourself out there, and that fear that what if this doesn't work? People are going to laugh at me, or but then once I was in the office, I'm dialing for customers, and I realized I'm doing the same thing I was doing over for the other company, but all the profit is going to my business instead of, a certain a small percentage, commission. So, I wish I knew about syndication much earlier. First of all, I would have been taking, cash and investing with other people. And secondly, I would have wanted to get into the syndication space, at a much earlier age. But hey, I found it when I was 48. I'm thankful I found it. Some people don't find it. So I found it, and I'm very thankful for that. And another thing that I would say with that is that somebody asked me last week, they said, Darin, would you recommend waiting till later in your career to get into syndication,
Oh, that's
or
a good one. Yeah.
starting earlier? And I said, that's an interesting question, because you start earlier. Here's the challenge. The challenge when you start earlier is you probably haven't saved up that much money. So you probably don't have a ton of capital to actually invest. In addition, you're young and you may not have built up a track record and a strong resume where people look at you and are like, oh, that guy, he's successful, Well, those two pieces are challenges, getting started if you want to do large scale multifamily. So you probably would have to, you definitely have to be a hustler, somebody that has a lot of confidence, and somebody that's comfortable as a younger person developing relationships with people that are older. And when I say older, 30s, 40s, 50s, 60s, because that is the bucket of people that have money to invest. So you have to be able to develop relationships and build trust with those types of people. So doctors and lawyers, and going to your parents' friends and neighbors. And if you're comfortable doing that and you think that you can win those people over, then there's a good story to tell, that you're going out and doing the hustling and finding the deal, and they're providing the capital to do it. The benefit to waiting later in life is that you probably have more money, and you probably have a larger network of people that already know your accomplishments in other industries. And it's like, you know what, that guy's successful over in what he does. I have confidence that if he comes over and does this, that, he's a trustworthy guy, and I'll give him a shot.
Nice.
Oh, that's awesome. Let me go a little bit into your your recent kind of deal, because you've been doing this for 2 years and now you're a principal owner. How were you able to implement those steps that a mentor gave you in order to get to being that principal owner? And were you a sponsor? Were you, an accredited investor, had enough net worth where you guaranteed the loan yourself? How did that all come to place?
So it's a combination of all those. So I am an accredited investor. I invested in 7 deals passively with different sponsors. I don't think that everybody has to do 7 deals before you do, your own sponsorship deal. I chose to do that for a couple different reasons. One, I had pulled a bunch of money out of the stock market, and I just was more comfortable investing in large scale multifamily. Thought it was a better investment. And I also put it into different sponsors deals, so that I could see kind of the different styles that each sponsor had, because when you get into one of these deals, you're going to receive email communication from each of the sponsors on your deal, and each one has a different style in terms of how much information they provide, what kind of reporting, what kind of, and so it starts to form the basis of, okay, when I become a sponsor, what do I want that to look like? And you take the good, the better pieces that you see from multiple people. So in terms of becoming a sponsor, at the same time as I was investing in these other deals, I started to go through the steps to become a sponsor. And there's a lot of steps. And people say, which step was scary? And I'm like, they were all scary, so they are. I mean, like, but a number of people told me, don't get overwhelmed by all the things you have to do. Just focus on the next 1 or 2 steps, and then once you do that step, you look back and you're like, that wasn't so bad. And the next time you do it, it's no big deal. But then you have a new step that you've never done before and you're scared. I mean, little things like what are you going to say to the broker, and how are you going to build, have the broker think that you're, somebody that they should be working with? What do you say to a property management company when you don't have a deal, and you want them to put together a budget? Hey, what do you say when you go into another apartment complex down the road to see what kind of rents that they're charging for their property? All those things are like, until you do it, you're like, am I going to fumble on this? Right.
Yeah.
And so you ask other people, how did you handle the situation? And then it's just like anything. I mean, look, you guys started this podcast. I don't know what episode you guys are on, but I got to imagine the 5th episode, you were more comfortable than the first episode,
Well, definitely.
Yeah.
And, it's like anything. So you just have to kind of take that leap, that step out there and do one step at a time. So that's pretty much it.
Yeah, I think that's awesome for us. Actually, we're willing to hit a wall and fall and break our leg and learn from it, as long as we can take a lesson from it.
Absolutely. Look, it takes a lot of courage to do it, to put yourself out there, to reach out to new people, to, develop listeners. I mean, like, look, I applaud you guys. It's fantastic.
No, I just to continue, I love the story. I love the fact that you come from the 9-to-5 job, and your resume, when we were reading it and we were discussing it to my brother and I, it was so impressive. And to hear that in 2 years, you're doing, you were humble enough to go and look for mentorship, and in 2 years you've grown so much. That's very impressive.
Absolutely. So like, it took a year from start to finish to close on the first syndication deal. And what I would say, who knows, things might change based on, everything that's happening with the COVID crisis, and who knows what happens with real estate values. But, in the Dallas market, it's extremely competitive. And I've talked to a lot of syndicators all over the country, and they see the same thing. It's extremely competitive for large scale, multifamily. When I talk about large scale multifamily, we kind of focus on 60 units or above. My first deal was 76 units, and now I'm focused on 100 plus. Well, close that deal. I could not have done that deal on my own. I'm convinced of that. So, as I'm investing in other people's deals, we're having these networking events with the mentorship group, developing relationships with people that would potentially want to invest in a sponsorship deal if I was to come up with a deal, but also developing relationships with people that are 2, 3, 4, 5 years ahead of me, that have already bought, rehab, sold, 100 plus unit deals, experienced guys that have been there, done that, right? So in order to win deals, you really need to partner with somebody that has experience.
Yeah.
So I partnered with a guy that I met through the group. His name is Raj Gupta. Super guy, super smart guy, ton of real estate experience, and he's out of Chicago. Well, I never would have met him. I'm in North Dallas, right? Never would have met him had we not been both part of this mentorship group. And so we got along well. When I found the deal, I pretty much put it all together and then contacted him and said, hey, I've got this deal. Would you be interested in partnering? I'd done all the legwork. I review it with him. He's got another property like 5 minutes away. He's like, oh, I know the area. I like the business plan. I'm in. Well, now when I submit the letter of intent, it's not just Darin Batchelder with an attractive loan trading resume, but it's me. And so I've got the business background, but then I'm partnered with Raj Gupta, who has all this real estate experience.
Right.
And he also has a deal 5 minutes down the road. So when the broker and the seller look at that, it's a much more attractive buying group than had I tried to do it on my own. I know for a fact I would not have won that deal if I was not partnering with somebody that had substantial experience. Most of these deals get 15 offers, maybe 5 or 6 go into best and final, and then 3 deals are, the offers are pretty close. And so the broker and the seller sit down with each other, and seller says, who should I go with? Right. And
Yeah.
the broker, who do you think the broker's going to pick? He's going to pick who he has the most confidence is going to close, because one, he wants to get paid, right?
Yeah.
He doesn't want the deal to go bad and his commission to go away. And secondly, he doesn't want to get egg on his face and, possibly, look bad in front of the seller and have to go back out and remarket the deal. So, I think it's critical to develop relationships with people that are experienced on your first deal or two. So that's one of the values of joining a mentorship group.
Good. I think we'll take that one to heart. We appreciate that advice. That's solid right there. As far as you mentioned it being competitive right now and seen everywhere. I know we had a couple LOIs we sent out. We had a 50 unit that we were trying to get. And it was extremely competitive, just like you mentioned. What are you seeing now with COVID? And are you slowing down as far as, when I mean slowing down, maybe you're still looking, but are you trying not to buy right now and kind of maybe waiting for third quarter? What's your strategy right now?
So it's definitely changed things for sure. So in the last year, I've been runner-up on 3 deals, and probably 2 or 3 weeks before COVID happened and all the lockdowns started happening, I lost a deal that I thought we were going to win the deal, and it was very, very close, but we did not win it. Later on, I kind of looked upstairs and thanked the big man upstairs, because it would have been a challenging time to go through an equity raise and raising money from people in the middle of that. But I know the other group that won the deal, and they got the deal done. But I'm sure there was a lot of roller coaster rides going through that process. So yeah, a lot of things I think things are going to change for sure. With the government saying that there's no evictions for 120 days on a lot of these properties, it's going to impact cash flow. Well, when cash flow goes down, it impacts your valuation. So I personally think that there's probably going to be a time delay where, sellers that were going to sell in their property was worth X in February, they probably don't want to drop their shorts, in March, April, and they're probably going to wait to see kind of how things flush out in terms of pricing. And then on the flip side, I think it's going to be unrealistic, I think, for buyers to say, all right, April, May, June, your collections dropped by 20%. So, your property should be worth 20% less. I think that, that's probably going to be the worst case scenario. And that's going to be the most likely the bottom of the cash flow. So I think that the valuation will probably fall somewhere in between, and it'll take buyers and sellers a little way to get there. In terms of my strategy, I'm talking to all the brokers and saying, I'm game right now. If there's an opportunity that comes along right now, I'm open, but I'm not going to value it the same way I did in February, right? I'm gonna be looking for some kind of, because there's risk, right?
Yeah.
We don't know for sure. You hear it on TV all the time. Is this a V? Is this a W? Is this a U? Is this a L? Is this a
Yeah.
swoosh. What? There's no guarantee on what's going to happen. So there's additional risk. So any buyer has got to be paid for that by having some kind of lower purchase price, or what I saw happen with some folks, which I think this was a good win-win approach, was some people that went into contract pre-COVID, and then COVID happened, they kind of renegotiated with the seller, even though they were already in a contract. They're like, look, this just doesn't make sense anymore. The bank is going to give me a lower loan because cash flow is going to go down. So their loan proceeds are going to get cut. Okay. The loan proceeds get cut. They have to raise more money, and it's going to change the return profile for the deal. So, I've heard, sellers trying to come up with a win-win. Maybe they say, hey, I'll put some money into escrow. Okay. And I'll guarantee your first 90 days won't drop below this amount of rental revenue. Even if it comes below, I'll make up the difference.
Okay, I was going to ask that. Yeah.
For the first 90 days, Okay. And so that's a great win-win, and that takes away a little bit of the risk for the buyer, right? Knowing that they've got another 90 days or whatever's negotiated, 120 days. But what if this ends up being, a much bigger, recession that lasts a long, a year, 2, 3 years? Well, they'll get paid for that 90 days, but then, the buyer is on the hook, from that point forward. So nobody has a crystal ball, but I think that there's going to be negotiation for sure.
Okay, well that's interesting to hear.
Mm-hmm.
Yeah, different perspectives that we've heard from different people. Some people are like, yeah, we're buying right now. We're like, okay. Yeah.
I would buy right now, but I definitely would be looking to have, be paid for the additional risk, either in a lower purchase price or having some reserves set aside or something.
So are you having, well, are your investors, what are their concerns right now as far as, well, obviously COVID, but what are they saying to you right now? Are they willing to still put in the same amount of money? Are they more conservative? And what kind of asset class are you looking into? B, A, C?
So I haven't polled, all the investors. I'm sure that there's investors that are completely on hold, and then there's other investors that will look at this as an opportunistic time to invest with people, so it's just a matter of having the confidence that you can raise the capital, so if I find a deal, I'm going to go partner with somebody that I know has a strong investor database, and whether it's Raj or it's, he may be working on something else, and I go to a different partner on my next deal, that's fine. But I'm going to feel confident between me and whoever I partner with, we're going to be able to raise this amount of capital, and if we're confident in that, then, we'll proceed. If we feel like, hey, this might be a stretch, then now is probably not the right time to do that. Your question in terms of what do we invest in? So I'm focused on BC. So I would define that as 1960s, 70s, 80s construction, workforce housing. Kind of the tenant base is income profile is kind of maybe 35,000 to 65,000. That's the kind of the tenant base, the profile of the property. Look for stabilized deals, which we would define as 90% or greater occupancy, but that has some kind of value component. So what does that mean in terms of value component? That could mean a lot of different things. It could be, the exterior of the property just hasn't been updated. So maybe it needs a new paint job and new signage and, improve the curb appeal. It may be that somebody else already did the exterior, but all the interiors are really dated. And so, you could buy that property and then start upgrading the interior units and then raising the rents on the upgraded units. Now, how do you know how far you can raise the rents? Well, you look at other properties around and you're like, okay, there's these 2 other properties that have already been renovated. Okay. It looks much nicer. It was built around the same time frame as our property. But it's got a new paint job and they've got nicer interiors. Okay. And they're getting $100 to $125 more in rent. Okay. Well, that's kind of our case, and maybe we don't take it all the way to where they are. Maybe we say, all right, we're going to do this and we're going to raise rents by, $85, whatever, and stay below them. But that's how you gauge, whether you don't want to, there's always got to be somebody that's first that looks at the market and says, I'm going to upgrade this place. And I just know I can. We kind of focus on proving it out, finding other properties that have already proved out, the case, and then just find another property that we could do it with.
Yeah, and that's definitely safer for you and the investors.
Correct.
Like a great approach.
So I'm curious, Darin, and just to start wrapping it up,
Sure.
in regards to how has the transition to becoming a real estate investor has affected or benefited your lifestyle and your family, the time that you spend with your family, the balance?
Yeah,
that's interesting. I would say for me, I'm later in my career than you guys, right? So it gave me a new energy and a new passion. I enjoyed getting my business started and learning it and from ground up. But once I started making money at it, it wasn't. It's a job for yourself. You're self-employed. You still got to, bang the phones and do the work. And the real estate side is a longer term play, right? So I don't have to spend anywhere near as much time on one property. But look, I spent the last year chasing my second deal and I came runner up 3 times, right? And I didn't get my second deal. So this year, I sure as heck hope I do get my second deal. But it's a longer term plan. Like, when I look at it, it's not what one property can do. It's okay, I get one property 1 year and then 1 or 2 the next year and then 1 or 2 the next year. And then all of a sudden in year 4, you're selling the first deal and you get a big influx of capital. And then, the next year you're selling the deal that you bought 3 years or 4 years before that. And then it starts to snowball. So, I think that it's probably a, 5-year, on paper, my wealth has gone up, but like, it's different than it's all in an illiquid asset, right? And you're getting cash flow from it. But that's the mindset has shifted also from once you get into real estate world, you start learning that all that stuff that you were taught before, save money, put it in a 401k, grow this big nest egg, and then when you retire, you pull money out.
Yeah.
Well, the real estate world teaches you a little different. It's more like buy assets that generate cash flow, and that cash flow, sustains your lifestyle.
Yeah.
Right. And
yeah, it's a whole different world.
Yeah, it's a whole different world. So that's the process I'm in, is taking, capital and putting it to the assets to generate the cash flow.
So in other words, so real estate has, or it allows you to spend more time with your family because it's not a continuous hustle. Am I correct?
Yeah, I mean, it's definitely gives you flexibility, a flexibility of your time and how you want to work it. I say if you want to be successful in a competitive market, which real estate is competitive, and when you don't have experience, you're having to make up for that some way. And most likely it's through the hustle factor. Either building more relationships, going to more networking events, or underwriting more deals than the next guy. Whatever the case may be, you got to make up for it somehow. But it's for the longer term. It gives me flexibility now, but I wouldn't say that it's like, oh, I transitioned into real estate and then after a year or two I can sit by the pool and not think about my next deal and I'm just hanging with the family the whole time. Well, I don't necessarily think it's like that. I think you got to put in your time and but look, if you put in 5 years of hustle and then all of a sudden you're in a position where you could do 1 or 2 big deals a year, and all the brokers know you, and they call you first before they send it out to everybody else. I mean, there's a lot of unfair things that happen, and that's okay. We just have to understand the game and know that, hey, at some point I'm going to be in that situation where I'm getting the advantage,
in the good seat.
You eventually you're going to be in the good seat. Exactly.
Nice.
I hear you, man. Well, Darin, thank you so much, man, for coming on and dropping so much amazing knowledge. Last question, where can people find you or reach you for anything, your deals, just to talk to you?
Sure. So always interested in talking with people for 2 things. One, if anybody's interested in, investing passively, love to connect with them. And also just if I can help out in any way, again, I love giving back. So best places to reach me, Instagram, at Batchelder Darin. That's BATCHELDERDARIN. That's the best places on Instagram. I'm also on Facebook and I'm also on LinkedIn. And then you could email me at dbatchelder@tzkproperties.com.
Awesome, man. Well, again, thank you for coming on. And for your listeners out there, just hit that 5-star review and give us some feedback, good or bad. Let us know. We always like to improve. So stay safe out there, everyone.